Gold prices are up, meanwhile oil prices are tanking. This comes down to exactly what we mentioned to you on the week ahead report, expecting oil prices to start their cascading sell-off as we head into this week. Currently oil is down 2%. We have copper prices breaking back down towards their swing lows. Gold prices briefly dipping back below $1,900 per ounce before spiking back to $1,912 per ounce. We have silver back at the swing lows, getting supported, turning positive on the day, and alongside that, opportunities here with platinum and also with palladium. So this week, Wednesday, we have the minutes of the FOMC. Definitely a news item that you do not want to miss out on. Typically, this can provide a massive catalyst. Going into next week, we're moving into the Jackson Hole Symposium towards the end of next week, and during the middle of next week, we have the BRICS Summit, where they're scheduled to discuss the prospect of a gold-backed digital currency. Now, as you know, normally at this time of year, between now and the end of the month, this does tend to be supportive for metal prices. So as such, we've taken the opportunity here last week to bank 300 points profit on our US dollar position. As you know, we've been long over July into August. We caught the swing low. That's been a fantastic opportunity. We also, as you know, banked at the highs there with Brent crude oil for 1,220 points profit. We were long from $73 per barrel, and then we've reversed position to go selling short. And this week, of course, we've now seen oil prices on Tuesday. They've broken down over 2% with all of the negative sentiment that we've seen coming out of China, the negative news over the last 24 hours, all of the negative data points, that this has led to sell-offs to the downside on copper and also on Brent and WTI crude oil, alongside gasoline and heating oil as well, which we talked you through on the week ahead commodity report. Now, the major opportunities, as I see it right now, and our positioning right now, as you know, we're selling short into oil. All of those trades, they're currently moving nicely and healthily in profit. What I find fascinating is that last week, hedge funds and money managers, they built into their highest net long position on crude oil that they've been in all year. So essentially, we've now got 84% of hedge funds and money managers, they're long oil, FOMOing again right at the top here, right back at the swing highs. And we've seen that as a result, of course, of the output cuts from Saudi Arabia, Russia as well. This is creating a lot of positive sentiment for energy prices, but a prime opportunity for a rug pull. As you've seen oil prices, they've broken down dramatically here at the start of the week. Everything that we've been anticipating with you here. Now, most notably as well, is that hedge funds and money managers, they've significantly reduced their long position in the last week on gold, which means they're starting to liquidate their position. As we know, a lot of them have been bag holding above $2,030 per ounce. We saw this data going back to May and June, and now with the cascading sell-off that we've seen to the downside with gold all the way down to the 1900s and just below, this has liquidated a lot of those hedge funds and money managers, and with that, we're now starting to see reversals from that zone. After many traders have been stopped out, they've hit areas of liquidity, we've seen a washout, bear trap, and now we're starting to see a reversal from the 1900s. So again, I'm liking the precious metals around the current zones for rotation higher between now and the end of August, especially once we get past the minutes of the FOMC on Wednesday and into next week's Jackson Hole Symposium and the BRICS Summit as well. It's so important to be on top of the narratives, the data, the cycles, especially the real-time data-driven cycles for each commodity. So learning and understanding the capital flows, then alongside that, the daily, the weekly, quarterly data-driven cycle for each commodity. Very important to understand that. And then, of course, you want to be looking at the intermarket correlations, the ratios in the market. So right now we have energy prices. They're also dragging down copper prices. We've seen this with the China stock market as well, starting to roll over alongside the S&P 500, which is all correlating nicely with a breakout with the dollar last week, which we've of course capitalized on here as well. Then of course you want to understand and learn where the key areas of liquidity, where they reside, so you can get your sniper entries in and also bank those windfall amount of profit before then rotating, changing within the cycle and going in the opposite direction, and then rinse and repeat. This has been the case with many commodities throughout 2023, especially oil. It's been very straightforward to capitalize multiple times on this year of trading that range with energies. Then alongside that, you want to be utilizing data, statistics, and market intelligence, and of course further align this with how the hedge funds, the money managers, how the banks, how they're all positioned in the market in real time. This is going to all help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the professional research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click on the link below today's report in order to make application to join our professional mentorship program.